I thought I'd come on today and do another session. Yesterday, I did a lesson on the iron butterfly. And if you didn't catch that, I can put a link to that in here if you want. I posted that yesterday evening. We talked about selling the iron butterfly and capturing premium on that. It's a high reward to low risk strategy, but you have to be able to kind of manage that risk reward so that you don't get yourself into too much trouble. So we did a session on that, on how to set those up and how to manage them. And then I thought we would do another thing I've been experimenting with and having some pretty decent success with is the call credit spread, or the put credit spread, just the credit spread at a certain time. So hold on, let me put this in here. Oh, can't spell. Butterfly lesson. All right, is there. And then this one is on credit spreads. So both put credit spreads and call credit spreads at 10:30. Yeah, Ken, I just posted it just above. If that link doesn't work, let me know. That should be the link to the Iron Butterfly from yesterday. And this is credit spreads. So same kind of idea is we are selling premium and trying to capture that theta decay as the day goes on. Obviously, you can manage them, take them off early if you're well into profits, which I do from time to time, because I just don't want to risk a reversal. But what I'm doing with the strategy is every day at around 10:30. So at about 10:15. Hold on a minute. Let's see if I can put that in. At about 10:15, I start watching the market. Generally, we get some level of a reversal, one way or the other. Sometimes short term, sometimes a massive reversal at about that 10:30. Right, the last 2 days has been around 10:25. Sometimes it's more like 10:40, 10:45. We'll get a turn. Not necessarily a sustained turn, but what you'll see in a minute is it tends to work pretty well. And I'm basically using our sniper turnaround indicator. So I'm waiting to put that on when we get a sniper turn. We get one of these types of indicators right here, the turn at around 10:30. Okay, so usually we'll get ourselves into an overbought or an oversold position, and I'm waiting for that indicator to give me the turn, and then and then I will take a credit spread. Okay, so for the rules are at around 10:30. Okay, so we'll put that back on the screen. Okay, at about 10:30, I'm looking for a reversal. Right, I'm looking for a reversal. And if price is above the open, I'm selling a call credit spread. Okay, so that means in these three green bars here, I'm selling the closer or the lower credit. The call. I'm selling that call, and I'm buying $5 call behind it. And generally, I'm trying to do it right at the money. So I'm getting, per contract, I'm getting at a 1-to-1, sometimes, like a 1.2 to 1 reward to risk. Okay, so, for a single contract, generally it's coming out to about 250 a piece. for my risk to reward. Sometimes it's a little bit skewed one way or the other. Fog, let me put that. You might have to copy that whole link in above and just copy it in. And if not, I will try again. Here, I'll try it one last time. Let's see here. So if I go there, I go to share, copy. Let's try that one more time. Okay. We'll try that one. All right. So basically, if I can get it, when I'm buying it and price is in between those two strikes, I can get like today's. Let me pull up today's. Whoops. So today's credit spread was a call credit spread, and I have it on for 295 was the credit that I got. So this is today right here. I got 295 credit and my risk is 205. So 205, not 20R. So there's my risk and there's my credit. Okay. And so what is happening is I need price essentially, and I'm in the 840s and 845s. Now I've got these marked on the SPY because I started tracking it just on the SPY chart, but I'm selling 0 DTE SPX calls or puts, right? But this is charted on the SPY, so it's not going to give us the exact numbers. This is just for illustration purposes. I hope that makes sense. That it's basically a 10-to-1. It's essentially the same instrument, right? So I sold the 840s, 5840s, and I bought the 5845s behind it. Yes, Sharky, I am recording this session, and so basically I need from this level here, as long as price closes today below this level, I earn what did I say? 295? Yeah, 295. Okay. Now, I can also take it off early if this were to really rip down in the next 5 minutes. It's also going to, it's not just the theta decay, it's also going to move away from those levels, and I'm going to get closer to my max profit. So a lot of times if we get, like in this instance here, 4 days ago, I put it on here at the reversal, this was like a 1025 reversal here. And then I took this off as it broke down into the low, because I was at 90% of my profit, and I might as well take that. There's other ones where it takes the whole day really to get you there. But they're at about a 67% win rate, give or take. So if price is above the open price on the day at that 1030-ish reversal, I'll put on a call credit spread. And if it's below open price, I'll put on a put credit spread. Okay, let me find a put credit spread. So this was a put credit spread here that it ended up not working. Okay, and that was one I held all day. I could have taken it off up here, but I didn't. But that kind of shows you this was a put credit spread here, which means I needed the price to finish above. And towards the end of the day, I think we had some news here. I can't remember what it was at the moment, and we just dropped off and then ended up closing below. Right, so that was a max loss. But because my risk reward is 1 to 1 or slightly better than that, that's only a $200 loss or $220 loss, right? And you can see here, and had I managed that better, had I been, here to manage it, when we were in this range before that news, I was at about 70% of the credit. Probably a good time to have taken that off, but I just wasn't here at that time. And you can see these red ones are misses. When we have a big volatile day, that they're not going to work, right? And if you can, there's 1 or 2 in here that I was able to identify that we had a trend day using the volt indicator that we've talked about before. And I didn't put the credit spread on because it looked like we were going to have a trend day, and those are tough, especially if you're just playing by that 10-30 reversal, because it's obviously just going to keep going up. So you'll see every once in a while you'll get a string of them together, but as I kind of go to more like a 10-minute chart and I pan out here, you'll string like 10 or 15 together that are winners, and then you'll have 2 or 3 losers, and then you'll start stringing more together. So that's the sort of 10-30 reversal credit spread strategy. Now, tomorrow I'll do a video on the iron condor strategy, which is essentially a call credit spread and a put credit spread at opposite ends, and you're hoping that the underlying closes in between the 2 credit spreads for your max profit. And you can put on an iron condor. That's what that's called, an iron condor. Or you can create an iron condor by playing the swings. Like today would have been a great time to say, okay, well, I'm going to play the opening, sort of that opening hour range with 2 reversals, and then come in here and say, all right, well, the early reversal that happened would have been, I didn't mean to do that. Sorry. Let's get rid of that. Let's copy and paste this one. Would have been down here, right? So you play that reversal, and then you play this reversal, and now you have an iron condor on, right? Because this would be a put credit spread. This would be a call credit spread. But I didn't do that this morning. So this is just the call credit spread. I have an iron condor on at a different time, which I'll talk about later. So right now, while we're still holding VWAP here on the SPY and SPX, the call credit spread that I put on at 10:30 is still looking good. Does anybody have any questions on that? They're all 0 DTE, and the nice thing about the XPX, remember I have this graphed on an XPY, but on the XPX is what I'm playing. If let's say this were to just rip down and we just had a trend down day for the rest of the day, I'm not saying that's what's going to happen, but let's hypothetically, and there's just really no risk of this coming back up and maybe becoming a negative trade, I can just let it expire. I'll let that value expire at the end of the day. Everything's cash settled, and you've already taken that credit in, so you get that max value. Do I mean SPX? Yeah, did I say something different? Almost all of these 0 DTE trades that I'm doing, either snipers or these iron butterfly, iron condor type trades, they're all on 0 DTE SPX. Yeah, you can play the XPS, which is the same kind of idea. It's just 10 times. The XPX is 10 times the XSP or XPS. What is it? Now I'm second guessing my own Now I'm second guessing my own brain. XSP. There we go. XSP. So that's gonna resemble the SPY a little bit more in terms of price. Yeah, right. When I start saying it too fast, SPX, XSP. I have to say it slowly. Because the P's in a different spot. Does anybody have any questions about those? So tomorrow I'll do the third one, which is the Iron Condor. And then those are the three things that I've been playing every day for the past month, and it's been doing pretty well. So Polaris, you really your stop is however you want to play that. So you're going to get money into your account when you put on the trade because you're selling the call and you're taking a credit. And so you just have to buy it back to stop out. And so usually we talk about these as, a percentage of the credit given, right? So for me, I've just been letting these expire. So max win for the most part. If I'm 80% of profit, and like for instance, here on what was this 3 days ago, when the market just went sideways, my iron butterflies did great. The credit spread it also did great, but it took all day for that thing to get to like about 85 to 90% of the value of the credit. And so right here, as we were kind of coming up into VWAP, I was at 90% of the credit, and it was close enough that if we got a little volatility into the close, it could ruin those profits pretty quick. And so I took it off for 90% of that credit, so I had to buy it back for a little bit just to preserve that profit. Whereas on a day like this, as you get into the close and you're way down here, there's not a lot of risk of that maybe coming back and dissolving that profit pretty quick. So on a day like this where you're just barely, and the reason this one's yellow is because this was a credit spread, so this was yesterday, I needed it to close below. We just kind of slowly had this drift, and this one was going to be a loss, but we got this close that brought me right down into here, which is between my two strikes, and it closed, and I think this was closed for like I'd have to look it up. It was like a $15 or $25 loss, right? So very minimal loss because it almost closed. And if it had, and the funny thing about these is if it just closed 1 point below that level, that's a full value credit, right? If it closes somewhere in between, it's not a full loss, but it's most likely going to be a loss. So that one I put in as yellow because I don't really count that as a loser. It was basically a break-even trade, and that just becomes how you start to feel out how these feel. That's a little redundant. Feel out how these feel, and you can close them out if you feel like you want to. Or you can let them run for the rest of the day. Yeah, this one, you're right. It does look like that. But what I did was exercise on the XPX. It turned into a So if I go, where are we here? So on the XPX at 10:30, it was higher than the close, right? So just a little bit different in where it opened and how that registered. Does that make sense? Whoever pointed that out, Polaris, I think. And you don't have to do these at 10:30. You know, that's just what I've been doing. You know, kind of trying to automate a little bit. But you can play almost. You know, if you want to do a credit spread or even a debit spread, which is a little bit different, which I can go into in another training. You can play these sort of sniper reversals throughout the day. You just have to exercise them. A little bit differently, and it's a little harder to open and close, you know, spreads. But once you get the hang of it, it's a little bit more conservative type play, especially if you have trouble stopping out. Your loss is capped, so there's some benefit there. But this strategy that I'm playing with is just kind of playing one a day, 0 DTE. You know, targeting $200 to $250 per contract, right? So if you wanted to work your way up to you know 5 contracts, you know that's 1,000. You know whatever your risk parameters are, but just kind of trying to play the same idea each day and capture that theta decay within the 0 DTE range. Yeah, no, I don't normally take a stop unless it's just gone completely, you know, against me. Because the risk, you know, I'm not putting on, you know, 10 contracts. I'm willing to risk the $205 or whatever it is per contract, right? Okay. So I'll get that posted up as well. But that's been doing pretty well for me the last month or so. Yeah. So Jerry, the Iron Butterfly from yesterday, I've been actually doing two as a tester. The 230 Iron Butterfly are actually technically the, you know, as I back tested, it's about 242. But kind of that 230 into the close range, 20 to 25 wide at the money. So you're buying wherever the price is at the money, is doing pretty well. So but what I'm doing for myself is I'm doing a 10 o'clock one, 20 wide, and then a 231 or 242 at 20 wide. And I'm just continuing to sort of test those and see how they play out. The risk to reward is always great, you know. So like today's 10 o'clock one, it's about 1 to 2. I'm risking 660 to make 1340. So a little over a 2 to 1. Okay. I will get this posted up. Does anybody have any other questions or anything that they want to ask, or charts they want to look at that are not credit spread related?